Your electricity bill just went up, and it's not because you used more power, it's because a company most people have never heard of just made a move that's about to hit your wallet hard. Petronet LNG's stock rallied 23% in the last quarter. Wall Street celebrated, investors made money, but here's what they're not telling you: when energy infrastructure stocks rally like this, someone always pays the price, and that someone is you. Because this isn't just about stock prices, this is about the hidden cost of energy that's baked into everything you buy. Your groceries, your gas, your phone bill, your rent, all of it, and it all traces back to natural gas. Most people have no idea what Petronet LNG even does, but it controls something critical. Petronet is India's largest importer of liquefied natural gas. They run the terminals that bring LNG into the country. They supply the gas that powers electricity plants, factories, and industrial facilities across one of the world's fastest growing economies. When their stock rallies, it signals something specific: either global demand for natural gas is spiking, or they're charging more for the gas they distribute, sometimes both. And here's the part that connects to you: India isn't isolated, it's one of the largest energy consumers on the planet. When India competes for LNG on the global market, it drives up prices everywhere. Because energy markets are global, gas that could go to Europe goes to India instead. Europe bids higher, prices rise. The US exports more LNG to meet demand, domestic supply tightens, prices rise here too. It's a chain reaction, and it starts thousands of miles away, but it ends at your front door. Here's how it works in practice. Natural gas powers roughly 40% of electricity generation in the United States. When global LNG prices spike, utility companies pay more for fuel. Those costs don't disappear, they get passed directly to consumers. Your electricity bill climbs, not because you left the lights on, because Petronet LNG and companies like it are competing for the same fuel your power plant needs. And electricity costs don't stay contained, they spread through the entire economy like a wave. Think about the local bakery down the street. They run ovens all day. Those ovens use electricity. When power costs rise, the bakery's operating expenses rise. They can't absorb that cost forever, so they raise prices. Bread costs more, pastries cost more. Your morning coffee and bagel just got more expensive. Now multiply that across every business that uses energy, which is every business: restaurants, grocery stores, gas stations, warehouses, shipping companies, manufacturing plants. They all pay more for power, and they all pass that cost to you. This is why a stock rally in an Indian energy company matters to someone buying groceries in Ohio. The connection isn't obvious, but it's real. And it gets worse, because natural gas isn't just electricity, it's a raw material for fertilizer production. Nitrogen fertilizer is made from natural gas. When gas prices rise, fertilizer prices rise. Farmers pay more to fertilize their crops. Those costs get passed to distributors. Distributors pass them to grocery stores. Grocery stores pass them to you. That's why your tomatoes cost more. Not because there's a tomato shortage, because the fertilizer that grew those tomatoes got more expensive. Because natural gas got more expensive. Because companies like Petronet LNG are bidding up global prices. One rally in one stock creates a ripple that touches every part of the food supply chain. But most people never connect the dots. They see higher prices at the store and assume it's inflation, or corporate greed, or bad luck. They don't see the global energy market working exactly as designed, extracting value at every step, and passing costs downward to the people who can least afford it. Here's what makes this particularly brutal right now: Petronet's rally isn't happening in isolation. Global LNG demand is at record highs. Europe is still trying to replace Russian gas. China's economy is rebounding. India's energy consumption is growing faster than almost anywhere on Earth. Everyone wants the same resource, and there's only so much to go around. When demand outpaces supply, prices don't just rise gradually, they spike, and those spikes hit fast. We saw this in Eiling II. After Russia invaded Ukraine, European gas prices increased by over 300% in some markets. The US wasn't immune. Natural gas futures doubled. Electricity bills across the country surged. People couldn't understand why their power bill went up 50% when they didn't change their usage. But the answer was simple: global energy markets shifted, and those shifts flowed directly into local utility costs. Petronet's stock rally is signaling the same kind of shift is happening again, quietly, without the headlines, but the impact will be just as real. And here's the mechanism most people miss: energy companies are profit-driven. When they see an opportunity to charge more, they charge more. It's not personal, it's structural. Petronet doesn't set prices to be affordable, they set prices to maximize shareholder value, which means they charge as much as the market will bear. When demand is high and supply is tight, the market will bear a lot: record profits for energy companies, record costs for everyone else. This is already showing up in the data. India's LNG imports increased 18% year-over-year. Petronet expanded capacity at its terminals. They signed new long-term contracts at higher rates. All of that sounds like growth, like success, and for shareholders it is. But for the average person trying to pay bills, it's a warning sign, because those higher contract rates don't stay in India. They set a floor for global prices. If Petronet is willing to pay $70 per unit of LNG, other buyers have to match or exceed that price. The baseline shifts upward, and once it shifts, it doesn't come back down easily. Energy markets have a term for this: price stickiness. Prices rise quickly when costs increase, but they fall slowly when costs decrease. The gap between those two speeds is pure profit for energy companies and pure loss for consumers. So when you see Petronet LNG's stock rallying, don't think of it as good news, think of it as a signal that energy costs are rising, a signal that those costs will flow through every part of the economy, a signal that your wallet is about to get lighter and there's almost nothing you can do about it. Because you can't opt out of the energy market. You need electricity, you need heat, you need transportation, you need food. All of it requires energy at some stage, which means you're locked into a system where rising energy costs automatically become your problem, even when the profits go somewhere else. This is the hidden tax nobody talks about. It's not collected by the government, it's collected by energy infrastructure, by companies like Petronet LNG, by global markets that operate beyond any single country's control. And it's extracted from you every single month, in your utility bill, in your grocery bill, in the price of everything you need to survive. Most people will never notice the connection. They'll see higher prices and blame inflation. They'll cut back on spending and assume it's temporary. They'll keep working harder and wonder why they're falling further behind. But the answer is right there, in stock rallies that seem distant and irrelevant, in energy markets that feel abstract and disconnected. Those markets aren't abstract, they're not disconnected. They're wired directly into your cost of living, and when they move, you feel it. Petronet LNG's rally is just one example, one company, one market, but it illustrates a larger truth. The global economy isn't designed for your benefit, it's designed to extract value, to concentrate wealth, to transfer costs from those who profit to those who don't. And energy is the perfect mechanism for that transfer, because everyone needs it. No one can avoid it, and very few people understand how the pricing actually works. So the next time you see an energy stock rally, don't scroll past it, pay attention, because that rally is a preview of what's coming to your wallet, and it's already on its way.